So a E-mini S&P 500 futures forecast has been met that I made weeks ago. And here we are at the start of Q4, the beginning of October. So I want to show you how that forecast could have helped in your trading. And let's look at what's next. What can we expect after the forecast has been met? So before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so now you should see a daily chart of E-mini S&P 500 futures. The current front month is the December contract. That's letter Z 2022. Now, there are a few markings on this chart, and if you're new here, I'm Hema Reddy, and I use a combination of price action analysis, momentum analysis via my RSI power zones, and yes, forecasting or market timing. Now, I specifically get into my market timing tools in the Loss Forecasting Trading System, my educational course. But the place where I guide traders multiple times a week on the E-mini S&P 500 itself, which is the most liquid futures market on the planet, is in my Skinny on the Markets, where my 20-plus-year-old Skinny on the Mini report lives. And let me tell you something. So when you look at this most recent move down from the high that we had in August 16th, as early as September 14th, that's this vertical yellow line, you could have used the tools of the Loss Forecasting Trading System to make a forecast for price to be trading down into October 3rd with a target price of 3731.75. That's what a forecast is, my friends. It is a meeting of time and price. It is not, hey, the market's just going to rally endlessly or it's going to go up and bump against a level, but we don't know when. It has both components. You're using both axes of your chart, okay? So I want you to notice something. The intersection of these lines, that is the actual forecast. All right, so I took those crosshairs, I made them a little bit more transparent because I really want you guys to hone in here, okay? Look at how precise it was that price and time did meet at this level. Now, when you apply the loss forecasting methods, okay, the price action, if it was following this forecast to the T, would have come down and only come to the price target, not shoot below it. But as I teach in the Loss Forecasting Trading System, when you measure a cycle, and I teach different types of cycles and cycle units, and you see something like this happen, it usually means that the market is slightly weaker than expected, which is why the market fell below the forecast price earlier than in the forecast, right? It fell below that back on September 23rd, and then rallied back into it by October 3rd. Also, you might be wondering, well, Hema, when did you share this forecast with your Skinny the Markets readers? Well, I shared it on September 19th. So the gray vertical line here represents when I first shared, hey, we're likely to fall into this price by this date. And I kept my traders watching for weakness in the market as opportunities to take advantage of this. So if you'd like to be able to make those types of market calls and make money from them even when they miss, like this one did, the education is the Loss Forecasting Trading System, and it's supplemented and enhanced even more by my daily reports and stock picks and more in the Skinny of the Markets. All right, so very cool. And now let's set that aside, okay? We have the forecast that unfolded, and let's look at this market fresh and see, well, where might we go from here? So you might be wondering, well, now that we came to that forecast, Hema, what's next? Well, there are a few key elements I'm seeing that I want to bring your attention to. First, there is an advanced setup happening between price and momentum right now. And that advanced setup is a bullish indication, and it will be confirmed if price moved above 3751.25. That's a very important level in the context of this decline from the September 13th high. Now, if that unfolds, then I would be in a position to draw a new forecast based off of what has unfolded. If I draw it now, I might be a little bit too early. I may be jumping the gun, imposing my opinion on the markets. So I would rather wait for confirmation, if we're going to get it, with the market moving above 3751.25. Now, if we do break above that level, then this 3900 old bottom would be a great place to watch for the recovery to continue into. Okay. On the flip side, if the market weakens from current levels, where might it head down to? Well, the first thing we have here is our most recently posted contract low. But if you take a look at this chart, and again, this is the specific contract chart, okay? And if we go back in history, you will see, guys, that we can't get much more history than back in June of 2021. And the contract chart itself has no more support levels. No more. Does that mean there's no support in this market? Nuh-uh. There's two ways to derive support here. One is with advanced forecasting applications, where you look at price extension targets and price sub-targets, and I teach all of that in advanced loss forecasting. I also detail those levels in my skinny reports. The next place to get your levels from is the continuation chart, and that's symbol at ES. So now if we take a chart like this, okay, this is linking various front months together, then you can compare what's happening on the front month that you're trading to this contract chart, and you can see, oh, okay, we're near the March 2021 low, and before that is February 2021, and so on, and make your way back. So that's how you best can navigate what's up ahead here. And to start with, we do have a support, so that's why I use my pink line here, at 3571. Now that 3571 is extremely, extremely close to the current contract. Remember, if I flip back to ESZ22, the contract low is 3571.75 and the continuation chart support is 3571. It's only 3 ticks apart. So this leads me to believe more likely that futures are going to break higher from the current level. But we got to see how the price action unfolds, right? We got to trade what actually happens, not what we think is going to happen. All of the other details of various continuation levels and their importance, all of my advanced forecasting targets, all of that are detailed as supports in any ES report of the Skinny on the Mini. All right, so I hope that gives you guys some context about how to deal with the current recovery. And remember, you've got to trade what actually unfolds in the chart. You map out the road, okay? You put the markers on here, the support and resistance, but you got to watch for what actually happens and only trade the facts, which is price on your chart, okay? Earnings get adjusted and revised, but price is fact. All right, remember to subscribe, like, comment down below. Let me know if you pulled any nugget of wisdom here from this video. Join my tribe if you haven't already, and I'll catch you on the inside. You can sign up to the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.